Hello and welcome to this Monday's weekly market briefing. We've got lots to talk about, but firstly, OPEC Plus members extend production cuts in a bid to boost oil prices, as well as that simply good Chinese electric cars power ahead of their inferior US rivals, as well as that Netanyahu allies lash out at Gantz over Washington trip. We've got lots to talk about on the charts also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is on the topic of oil and OPEC Plus members. Now, Saudi Arabia and Russia are now extending their latest voluntary cuts to oil production, and this comes in a move to lead OPEC Plus members in a way to boost prices that remain low currently. Now, I feel like we were mainly talking about oil and OPEC Plus more so last year, actually, coming to, maybe the end of last year, but more so October, November, because that's when we really were talking about the OPEC Plus members, especially the leading members, of course, so Russia and Saudi Arabia, who were trying to basically push oil to that $100 a barrel mark. And that was like the key thing that everyone was talking about is, they're cutting production and, they're pushing supply in a way which basically makes it so that, prices on the upswing to the $100 a barrel mark. That said, we obviously saw kind of oil stop out and fail to actually reach that level. It kind of ended off a bit earlier, I think more so near the $90 a barrel level. And this also came at a time where we then started to see, certain weather predictions for the winter, which were basically saying that, the demand's going to be lower than those previously expected, and that kind of weighed on prices. But then we actually saw something which kind of boosted prices, and that obviously was the kickstart of basically the Israel-Hamas war, where of course we did see Middle Eastern tensions, so the regional tensions, but also world tensions really rise after that conflict began, and that was largely because many individuals, many different institutions, different businesses were starting to get worried to whether the fact Saudi Arabia or Iran would somehow involve themselves in this war in a way where they kind of become direct actors, and whether this also pulls in the US or someone like that. And this was kind of furthered when we then started to see those Houthis in Yemen attacking commercial vessels and oil tankers that were sailing through the Gulf of Aden and the Red Sea, and those two kind of things were really pushing oil to the upside, or at least that was the picture that was being made. But as we saw the months progress and as we saw weeks pile on, we really didn't see that push to the upside that one might expect from such a conflict. And as a result, we kind of saw oil's price kind of stagnate. We saw price breach below the $80 a barrel mark, to the downside for a second, but then it came up and above that level. And now we've kind of sat around that $80 a barrel mark, which is why this is kind of very interesting to hear now, because obviously weak demand has definitely waned on oil's push to the upside as a result of weather predictions and that kind of thing. And oddly, we didn't see much reaction to the Israel-Hamas war from oil markets. So it's a really hard kind of situation to judge, but understanding now that OPEC Plus members are going to continue those production cuts, we could definitely expect price continuing to the upside a bit more. That said, we always have to think about whether markets have already priced in these moves. It was largely expected by markets that the OPEC Plus members were going to extend these voluntary cuts, as it just kind of made sense to keep prices high. And so that kind of came as no surprise, really, I think, to most investors. So will this event actually keep prices high, in the sense of will there be a large change now that we've heard this news? Will there be a push to the upside in prices? That's definitely a question for you to kind of consider. Ultimately, though, I think other factors are also very much going to be important, and very much at play here when we're looking at oil's price. I know we haven't seen much action on the oil market as a result of that Israel-Hamas war, but definitely there's always that possibility of escalations elsewhere. We obviously saw certain militia groups attack US bases, and that kind of caused some level of escalation. And we've definitely seen certain regional kind of nations start to kind of get involved a bit more maybe, but ultimately keep your eye on that conflict in regards to oil, as that is very, very important indeed. Now, the current production cuts were expected to expire in March, but will now continue until the start of July. The current business climate for oil is interesting since the US has been increasing its production and there's been waning global demand. That global demand has really been waning recently, especially because of those kind of more warm weather than that was previously expected, and as a result there was less need for oil and that kind of thing. Since the latest round of production cuts, they have lowered the combined production levels of members by around 2.2 million barrels a day. These cuts initially drove the price of Brent crude up by 6% and WTI up by 8%. Oddly, despite high tensions in the Middle East driven by the Israel-Hamas war, oil prices remain below the $100 a barrel level last seen in the summer of 2022. It seems markets have already priced in the extension of the production cuts, with the price of Brent crude oil as a result rising 2% last week. Out of the OPEC plus nations, Saudi Arabia has taken on most of the oil production cuts, with the nation producing 2 million barrels a day less than it did in October of 2022. As well as that, Saudi Arabia recently dropped its plans to extend its daily oil production capacity by 2027, which was a big surprise to the world. So, this is very important news in regards to oil, and obviously we have so many factors at play at the moment for oil's market, so definitely keep your eyes on oil and your news around world tensions as well. That's all to talk about in this article though. Next article to talk about is on the topic of Chinese electric cars. Now, it seems that US car makers are now struggling to sell their electric vehicles due to Chinese rivals as a result of their products being inferior. This comes as the chief executive of Umicore, who said that Chinese electric cars were surging due to ultimately being more affordable and having better performance. Now, obviously last week we spoke about a key and important article in regards to electric vehicles, where we were kind of talking about the kind of weakening Western demand for electric vehicles, and we were kind of highlighting the fact that maybe we're kind of reaching the peak of demand, or we're starting to taper out in regards to Western demand for electric vehicles. We know there's a number of these reasons, but affordability and just ultimately consumers not wanting to replace their cars at the moment is a big thing. So if we're looking at the cars which are most expensive, which are those larger electric vehicles, more luxury vehicles, then ultimately we're going to see a drop in the demand for such products at a time where we are seeing US consumers hold on to their older goods for longer. So many consumers are now just holding on to those older cars rather than just replacing it with a very new electric vehicle. And that's why we're really seeing this kind of stagnation, I guess, in the demand for electric vehicles. That does seem to be the case, especially within the West. But what we're hearing here is that there's also a key supply issue now that's kind of coming on the horizon for these US electric car companies, with these Chinese electric car companies actually offering better performance for a better price. Now, obviously we do have certain trade restrictions in regards to China, especially within the US, so US and Chinese trade relations. There is a great deal of kind of limits in what can be traded, and we've recently seen, of course, Volkswagen within the US, which kind of got in trouble for having a car part which was imported from the Xinjiang region of China, and that obviously caused a great deal of commotion and conflict. So there's definitely issues growing within the automobile manufacturing industry, but especially the EV industry, where it is starting to seem like China is really taking over in this new and developing industry, where really the US doesn't have too much of a foothold just yet. And as we'll get into in the rest of this article, we really are seeing China kind of power ahead, I guess, in regards to their US rivals. Now, furthermore, US car makers are reportedly pulling back on their factory expansion plans. This comes as demand weakens in the West for electric vehicles. In contrast, electric car sales in China have surged 36%, with EVs now making up more than a third of the 21.7 million new vehicles sold in China last year, in contrast to 28% in 2022. The market for EVs in the US is small, despite electric car sales in the US still growing. The Berkshire Hathaway backed Chinese car maker BYD has now overtaken Elon Musk's Tesla as the world's biggest producer of EVs. The weak demand in the US has even led Ford to cut production of the F-150 electric truck, whilst also scaling back on their battery plant in Michigan. The reason for low demand is that the US drivers prefer larger vehicles, which make the EVs too expensive. So, very interesting things happening in regards to China as well as the US and their relations and the economies of both, but especially in regards to the EV industry and the car industry as a whole, really. So keep your eyes on all of that. And I think that comment around the Chinese car maker BYD now overtaking Tesla is something that's very, very interesting to note as the biggest producer, as the world's biggest producer of EVs. That's all to talk about in this article, though. Next article to talk about is in regards to Israel, with Netanyahu allies lashing out at Gantz over Washington trip. Now, with the US and Israeli ties straining, Netanyahu allies have grown annoyed at the senior minister Benny Gantz for his upcoming visit to the White House. Netanyahu's frustration has been made clear by the Israeli embassy's plans to boycott Gantz's meeting with the White House. This all follows Biden becoming increasingly frustrated with Netanyahu over IDF actions in Gaza, with the Biden administration seemingly largely preferring Gantz over having to work with Netanyahu due to the differences in where the two stand on policy matters. As a result, Gantz will meet the US VP Kamala Harris and the National Security Advisor Jake Sullivan. Gantz represents the opposition against Netanyahu, with the two currently existing within the same cabinet together, acting as a wartime government. Gantz, however, is continuing to represent a growing party in Israel called the National Unity Party, which has recently soared in opinion polls at the expense of the more right-wing parties in Israel. So very, very interesting to note. And this kind of, sorry, this is my antivirus. And this kind of goes back to, the world tensions issues at the moment. And this will definitely be playing into the way investors are viewing world tensions, as the Israel and Hamas war has definitely pushed world tensions to highs not seen for a very long time, as we are also experiencing the Russian invasion into Ukraine. So both of those invasions are really now pushing world tensions to their limit, it does seem. And the more this war kind of goes on, the worse that kind of gets, really, as we do see kind of negotiations break down and ceasefire deals kind of fail. So this is very important to keep your eyes on, and it will definitely be affecting world markets as a result of world tensions being affected. That's all to talk about in this article, though, and the articles as a whole. Next to talk about, of course, is the charts, where we do have quite a bit to talk about, and we are starting off on US indices as a whole. But more importantly, of course, the Dow Jones, the US 30, the asset that we always kind of start off with on these breakdowns. Now, of course, the US 30 has been in a very interesting position recently, just as a result of kind of the changing Fed rhetoric that we have been hearing around interest rates and that kind of thing. We are still kind of looking at the Fed with a more dovish outlook. We are still expecting those interest rate cuts maybe starting May of this year. But obviously these are being pushed back from those initial expectations of March rate cuts. So whilst we are, kind of expecting early rate cuts, not as early as previous, and this more dovish outlook that's kind of been pushed onto us very recently was triggered, of course, by last week's inflation figures, which did come in kind of very, very low and close to that 2% target inflation figure. And that's all kind of weighed into the way people are viewing the Fed's outlook. This week, though, we are getting some very important, Fed information, and we are also hearing from Jerome Powell, which of course is always so important to understand the Fed's outlook. All of that, of course, is making for a very interesting image on the US 30, which is still currently around its all-time highs. If we just brought up, if we zoomed out a bit on the 4-hour, this was the all-time highs before we broke through in December of last year. And since then, we've just continued this rally to the upside. So whilst, on the lower time frames, it does kind of seem like we've been stagnating and kind of ranging at so many different levels, we are ultimately making these new lower highs. Making these new higher highs and lower lows, and not lower lows, and higher lows, pardon me. And this is all reinforcing this kind of more positive, bullish image for the US 30. An interesting kind of technical analysis to note at the moment, of course, is just the basic trend line, which is representing this kind of upward momentum that we are seeing. And what we would want to see if we were continuing to expect this push to the upside is, the US 30 basically respecting that trend line and just continuing to the upside. As price did react to this liquidity level, now it is seemingly clear that it did react to that level, and so it does make sense that we are now on the upswing. Next to talk about, though, is the dollar, which obviously also relates to the Fed and the US inflation figures as well. But that's really not seen too much volatility, especially within the last week or so. And, we have just kind of seen price stagnate and kind of just range around. And that is why, price is still around the same levels that price was, on the 20th of February. So not much moves happening on the dollar. But obviously all these kind of periods where we do see price range do offer different trading opportunities. They don't offer those swing opportunities, but they do offer, certain kind of maybe intraday trading opportunities, or just, buying and selling those different liquidity levels which price is reacting with. So definitely keep your eyes on the dollar. And with so much news coming out this week in regards to the dollar, I think, keeping your eyes on it will be very important indeed. Just, think about, we're getting the NFP figure this week, as well as Jerome Powell doing a live testimony as well. So that's very, very important, and we'll all be pushing the dollar greatly. But obviously, we're going to come to that mainly on the economic calendar just after this. Next to talk about is Euro USD. So still on the topic of the dollar, and because it's paired with the dollar, whatever we're seeing on the dollar is likely what we're going to see on the Euro USD, but reversed. So that is kind of what we are seeing. We're just seeing price kind of stagnate and hold around this area of liquidity that we've previously noted, and that price has reacted with ultimately. So keep your eyes on the Euro USD. Next to talk about is pound yen. A very interesting pair and a very fun pair to kind of look at and trade. And recently, we did see on the lower time frames this kind of head and shoulders pattern form at a Fibonacci extension level, and as a result, we did see price kind of reverse. We did note, however, that there was this key 6180 Fibonacci extension, not Fibonacci extension level, but Fibonacci retracement level, which lined up with a key liquidity zone, which we kind of expected price to react to, and price did react to that level and shoot to the upside after coming into contact with it. And after that, we have now seen price kind of push back up to the upside and react with that baseline that we did see form on that head and shoulders pattern. And now price is kind of selling off from there. So maybe we're going to start to see some very interesting trading opportunities on the lower time frames, like the 1 hourly, and look for those intraday trading opportunities. But ultimately, price is reacting to these key Fibonacci levels, and price is reacting to these key, liquidity zones. So I think both of these kind of facts kind of play into a very interesting image for pound yen. Next to talk about is Bitcoin, which is forming a flag at these all-time highs. So definitely price could push to the upside, or price could kind of shoot down to the bottom side, wipe out any of those stop losses, gain that liquidity it needs, and then continue to the upside. So definitely keep your eyes on Bitcoin. Next to talk about though is gold, which has had some crazy price action recently, pushing to basically all-time highs. In a single day last week on Friday, we saw price pushed all the way up to the 2088 level, and that obviously lines up with two previous highs over there. And price is now reacting to that liquidity zone, so it will be interesting to see whether price does sell off from that level, as we've seen price do previously, or in fact it will just retrace shortly and then continue to the upside. So keep your eyes on gold, very interesting indeed. Lastly to talk about though is oil, which has now broken above this range that it was in, and this key liquidity zone, and this is largely being pushed of course by those OPEC plus members cutting their oil production. So that just shows how much fundamental news actually does matter to the charts, of course. So keep your eyes on the charts nonetheless. Lots to think about this week, and definitely lots of trading opportunities to note. Lastly to talk about, of course, though, is the economic calendar, where we do have an overwhelming amount of data coming out this week. So I'll try and get through it quick, but listen out for all of that to come. So firstly, we are getting the US services figures, followed by Aussie and Italian GDP growth rate figures, followed by that the Canadian Bank of Canada's interest rate decision and balance of trade figure, followed by Jerome Powell's live testimony and the ECB's interest rate decision and press conference, of course. Followed by that, we're getting the Eurozone GDP growth rate figure, as well as the Canadian unemployment rate figure and the US NFP figure. So a very, very important figure to note, and one that will definitely be affecting markets greatly and US markets greatly. Lastly to note though, in Asia, we will be getting the Chinese inflation rate figure, as well as the Japanese GDP growth rate figure. So some very important economic figures to note, and lots happening this week in markets. Hope you have a great trading week, but that's all from us at Wildwood Capital. Once again, hope you have a great one and a great trading day as well. See you later. Bye.